Summer is here along with summer travels, and while travelers might be frustrated with Air Canada, the airline, Air Canada, the stock, is flying high. The Air Canada stock is the most expensive stock in our coverage universe here in Canada, trading at a 36% premium to our fair value estimate. But why? Nick Owens covers the stock, and he's here today to shed some light on this. Nick, thank you so much for being here today.
Thanks, Ruth. Glad to be here.
So let's start with the basics. Is summer always a good time for airlines?
Generally, yes. Airlines have spikes in traffic over the summer of more than 30% than they do in the winter. And so summer is definitely the best part of their year.
So why has Air Canada's stock run up so much?
Well, airlines in general, and Air Canada included, are benefiting from a huge rebound in demand for travel after the COVID pandemic. There's 2 years worth of people's plans and vacations and family visits that are back on, and also new patterns of work with sort of business travel and leisure travelers getting kind of merged. And so the stocks are up because they're clocking record revenue, record profits. And some investors believe, as do I, that even if there were some kind of general recession, airlines might skip this one because there's so much demand for travel.
So all of this sounds like good news. What are some of the risks that you're watching for this sector?
Well, this is where I think it's important to distinguish the short-term versus the long-term case. We agree that in the short term, even 2 or 3 years out, airlines should do pretty well, if not very well. And that's being reflected in those stock valuations. Over the long haul, there are a few key differences, though, in the next, say, 5 years than from what we see from the 5 years prior to the pandemic. The airlines are in more debt than they were because they all borrowed a lot to make it through the pandemic. They will ironically owe more in taxes because they are suddenly more profitable. And most importantly, perhaps, the cost of labor and some other costs have gone up. And that's a huge input for airlines. And more or less, labor is a fixed cost for them in our view. So, for example, in 2019, labor was 17% of Air Canada's sales, and in 2022, it was 20%. As a result, the temptation, we think, for an airline, any of the competitors or themselves to re-enter price wars or overspend to go after new routes is higher than it was before the pandemic. And so we see a risk there that what we might call the normal cutthroat economy of airlines is likely to return.
The last thing I'd like to talk about is Air Canada in particular. Now, Air Canada is Canada's national carrier, but still, you haven't awarded it an economic mode. What's up with that?
Well, in fairness, the only kind of mode I can imagine for an airline would be a national carrier, but one that was completely protected from internal and external competition. This is kind of like in some fictional country. And where there would still be pressure on prices because the lower prices go, the more people fly. So there would still be that temptation, but at least it wouldn't have competitors. Air Canada competes for routes within Canada, connecting Canada, countries all over the world. And like all other airlines, it experiences the cost of fuel, the cost of labor, the changing of the seasons, and the geopolitical risks equally to many competitors. So I'm afraid to say there's no moat there.
Great. Thank you so much for joining us with your perspectives, Nick.
Thank you.
For Morningstar, I'm Ruth Saldanha.